G'day and welcome back to Shares for Beginners. I'm Phil Muscatello, and today I'm talking about shopping for shares. Financial technology, otherwise known as Fintech, is enabling an explosion in the delivery of innovative financial services. Gone are the days when the only way to invest was to buy those investments directly. To talk to me about this and about some general views on investing, I'd like to welcome Christian Eckelman from Upstreet. Hello.
Hello. Hi, Phil.
Christian is the co-founder of Upstreet, an app that allows you to earn shares as you shop, which is what? Shopvesting.
Shopvesting.
We'll get on to Upstreet, but tell us about your career before becoming a fintech entrepreneur.
So basically, I worked 9 years for Volkswagen Audi in Germany as an IT engineer. And so did mostly translation between business and the IT to bring it all together and translate it and bring it into production, and worked like in a product management role in like production, marketing, sales, service. So saw the whole production of a car and the servicing and the after sales.
So is it true what they say about German cars?
What do they say about German cars?
Well, I think it's the old joke, isn't it? The best car would be engineered by the Germans, designed by the Italians, and built by the Japanese.
Yeah, kind of. And then I did a bit.
You became a consultant as well.
Yes. So I did a bit of an unusual move after a couple of years where I was a bit bored in my role and wanted to do something else. I got into consulting by chance and got to know McKinsey over like a recruitment event over 6 months, and said it's actually quite good.
They're a very large consulting company, aren't they?
Top management consulting worldwide, almost in every city or every country they have an office. And I got to know them. I actually didn't like consultants before in my role. They were always a bit not my favorite kind of species. But I got to know them and got an offer and said, yeah, let's do it. Let's give it a chance. I joined and said, let's do it for a year. And it was a bit of this can I do it kind of mentality. That's over what drives me. Can I actually build it? Can I do it? Am I good enough? And 1 year became eventually 7, 2 years in Germany, where after like in the second year, I was doing again automotive and wanted to do something completely different. And McKinsey has global staffing. So I applied for a random mining study in WA. And 2 weeks later, I was standing in a gold mine and was thinking, "What did I do to myself?" As a software engineer in a gold mine.
So you were going to consult to a gold mine as a German software engineer,
automotive software engineer.
Automotive software to tell a gold mine how to be managed.
Yes, not really. They know how to do gold mining, but I think it's more coming in with some fresh pair of eyes and saying, okay, what should you do differently? And what I really found for me very meaningful in the automotive industry, it's like premium cars. It's very hard to improve something there. You have to look really, really, really thorough, and then you improve it by 0.5%, half a little bit here, a little bit here. But in mining, you could really make a big difference with small changes, and that was very meaningful for me. And also had a very good time and got to know these people better. I was stayed there for 7 months. It's not just a little bit. I was there for this long time. So we started something and I saw it completely through until we saw the benefit for the mine side and then also for the people having a job longer. So when I started there, it was more like we closed down the place going forward. Now it's still operational 7-8 years later, where I think that gave me a lot of meaning. It's way better than what we did in the past in other circumstances.
So what did you learn about mining in Australia from that experience?
So gold mining is basically dirt mining. You have 1 gram of gold in a ton of material. And astonishingly, I never saw gold in 7 months. But I got to know Australia. I got to know the Pilbara and like dingoes. And 1 dingo is nice. 7 dingoes are a pack and it's very dangerous. They chased me once. So kind of an interesting story, and brown snakes and all this kind of stuff. So I loved that 7 months in the desert, and and then met my wife basically in the office in Perth, And she was in Boston, I was from Munich, and we said, yeah, let's meet in the middle and stay in Australia.
You've learned a lot about how businesses run, being a management consultant.
Yeah.
What are some of the lessons you've learned that can be applied to investing from what you've learned about management and observing that in action?
Yeah, I think it's all about people. Yeah. So you need to look at who is running the business, who is like, and it's very top-down led. Yeah. So who is in the driver's seat, and what have they achieved in the past, and can they build a culture of a high-performing team? I think, and I experienced that with a client, but also in my own experience with the team. If you have a dysfunctional team or a team which has not fun or is under a lot of pressure or something is dysfunctional, performance is most likely not happening. And that's the same, I think, for companies. And especially we tried with many of the clients we're working with, we tried it for a couple of months and nothing really worked. And then there was a personal change. And all of a sudden from a team really from the bottom went straight to the top performing team like in 2 weeks. It's like an astonishing transformation you see if you crack this, either the culture and change the culture materially, or you actually say, okay, we need to rotate people, and then all of a sudden it unlocks unbelievable performance. And that is for me like the most important part. And then secondly, is that business sustainable long term? Basically, look at Nokia. Yeah? Nokia started as a rubber boot company, was then the world leading mobile phone producer developer. And there's a Time magazine article from 7 years ago, 1 billion Nokia phones out in the world. Who can stop the giant? Who's Nokia now? Nokia is still a very successful business, but what they do now is the technology, the back end of telecommunication. So they don't do phones anymore. I think they sold that business, but basically they reinvented them. And who can do that is the leadership. And because you need to tell your shareholders, we do very painful cuts through the business and then reinventing it. And another example is, for example, Netflix. Netflix started as like the DVD exchange, and that was making a lot of money. And I think you need to have a lot of guts as a CEO to tell your shareholders, you know what? We're cutting our money-making machine. We're stopping doing DVD and we're doing streaming. Nobody did streaming. And then we went into streaming, and that didn't stop. They actually reinvented themselves as well and said, streaming is not enough. We need to produce content. And now they're going into content. And probably the next curve is coming because now everybody's doing content. So what's the next development? Otherwise, Netflix might not be around for another 10 years. Yeah? So, but who is doing that? Management team.
And that management team, just going back to where you're saying that a change in a management team can make the biggest difference. How is that something that investors can see from the outside?
There's like a saying in Germany, when the CFO becomes the CEO, you should also leave the company.
What's that, the CFO?
So the CFO becomes the CEO, then you should actually leave. Or
that's like the chief financial officer becomes the...
Yeah, because it's more... And I saw that at Audi, and as an employee, there was basically the innovation stopped, and or it was all copying the same recipe which worked before, and then like 5 years later you got the feedback from everyone, hey, I cannot differentiate an Audi A3 from an A8, and then why do I pay for $120,000 or $200,000 and then $40,000, but they look exactly the same. So this is like copying the recipe and not innovating, because they're looking more at the money and the short-term profits, not at the long-term vision. It's very broad and very general, so you cannot always say that's true, but there is some truth in something like that.
So you don't want an accountant to be a CEO?
Yeah. Do you want to be encountered as a visionary or in a company? And look at the DAX or the NASDAQ. How many companies are there for 50 years in that? There are few. Who are the biggest companies in the world? Is Apple, Amazon, Microsoft. How old are they? 20 years, 30 years? So there's not these old General Electric or the others. They are just not there anymore. They drop out, they go bankrupt, they get split up. And now we see Tesla. Tesla is now as valuable as, I think, Mercedes-Benz, Volkswagen, and BMW together. Yeah?
Yes.
And they're producing, 100,000 units, 200,000 units, so nothing compared to these giants. But that is what the analysts think that is the future, and they're innovating. And they probably have a lead time of a year or 2 or 3 in electro vehicles. And it costs a lot of money to catch up, and this money is missing on other things.
Well, they make money from carbon credits as well. That's one of the biggest earners for them.
Maybe, I'm not sure about that.
But I think that's it. So in the car industry, and it's interesting that we were having a conversation before that most car companies are just basically banks. Can you explain that too?
Yeah, so I spend a lot of time in the car industry, and if you look at their balance sheet, yes, they're a manufacturing company, but if you really look closely, they're more like a balance sheet like a bank, because they all either work very closely with a bank, own a bank, or have a banking license. And what they basically do is financing the leasing of cars. So business wants to give their managers a car, so they lease the car, and that needs to be financed. So the car companies are very happy to finance it. And at the moment, it's like super cheap because they basically get the money for free. There's no interest rate or marginal interest rates on it, and then they load up their balance sheet. So if they have a balance sheet of over 100 billion euros or dollars, then like 60, 70, 80 is sometimes like leasing assets on that. And then you're wondering, how should I actually value this company? Is it a bank? Is it a manufacturing? And then it's basically 3 companies in one. It's a bank, it's a manufacturing, and it's a big R&D department, where R&D is probably 10, 20 years where you have to invest for the next 10 years. You have the manufacturing a highly complex product where you not only have to manufacture the car, but every new car needs a new production line. You build basically 2 products, a production line who produces the product. So this is highly complex. And that you do that in parallel. It costs a lot of money, a lot of time, and good people. And then you have this whole financing of the cars. So those are the three pillars. And then if you really look at it, where they make money is in after sales with parts.
So let's turn to the fintech industry. Recording today on the 18th of November 2020, and tomorrow you've been nominated for a couple of Fintech Awards.
Yes.
What are those awards?
So one is the innovative or alternative investment platforms, and the other one is the Fintech of the Year Award.
Well, good luck with that. We'll know the result
We're very
by the time
excited,
this comes out.
Yeah. Let's see what will happen. I'm very grateful to actually be nominated in the first place, and I think that's a gratitude to the whole team working for 14 months now. Really, really hard to get a financial product into the market, and I think everybody who has tried or done it before knows how hard it is in Australia.
A lot of people aren't aware of this ecosystem, but there's a lot of innovation and a lot of people starting up fintech-style businesses.
Yeah, I think it's a very interesting industry where you have the big 4 banks, which is unique in Australia. Yeah, so if you look at Europe, there are hundreds of banks, or US, there are hundreds of banks, or thousands of banks. And here you have the 4 big banks, and they have a lot of legacy technology and legacy to work through, and so that if you think they are slow or not that innovative, that has some reasons, because they have millions of customers and they need to run it, and it's not that easy to just change your major banking system. So they have the legacy industry, you have a lot of regulation, and then you have a lot of innovation with open banking coming in, and then the whole financial industry, but also worldwide, is disrupted with either blockchain or like open banking, money transfer worldwide, securities, and like the whole, it just exploded the last 10 years. And now you see how these new technologies come up, paired with like a mobile technology. I think you could have done it like 10 years ago, but who wants to do it all on a browser, and it was slow. But now you have your online every time with your mobile phone, and now you combine these couple of different technologies, and all of a sudden you see all this innovation happening, and it's exciting to be here in Australia. I think it's a very good point to start your fintech, because you have high card rate, so the cash rate is very low compared to Germany. My mom just got her first credit card thanks to COVID. She had not a credit card. Did
Your
everything,
mother has never had a credit card?
Yeah. She always used either a very old bank card, which is kind of a debit card, but it's also not. It's very Germany specific, but basically all her life she thinks cash is king and really paper cash. And here you have basically no one actually has cash. Yeah.
But we've always been adopters of technology.
Yeah.
We've always been, I think some companies have used Australia as a testing ground for new technical products.
But also Australia, I think, is a bit too timid here. We had Atlassian, we see now Afterpay coming out of this big companies, and I find it astonishing when a PM says, we should just adopt and not lead technology. I think that's the wrong way to think about it. I think Australia has perfect position to lead in green energy and in banking, because it's just natural resources, and banking is just a very healthy ecosystem here. If you look at the margins they're producing, and the money is there to innovate. I would argue in Europe it's a bit tougher for banks to innovate, and and then also like people want it. So there's in the loyalty space, people are super loyalty affine, and people wanted this innovation, or at least my impression.
Fintech is really one of the cutting edges of innovation, and that's where you're going to find the biggest growth.
There's a couple of growth drivers for Australia, and one is the banking sector. And then where does the innovation come from is in the fintech industry, where you know that there's a bit of if you look at the curves there, the technology development is like exponential, like driven by Moore's law. Yeah? Every 18 months, our processing speed doubles. It's more or less accurate. Maybe in the future it will be less accurate. But now we see a phone has more processing power than like the Apollo mission, 10 times more. So we can do all these nice, great things, but the companies can't afford to innovate in the same pace. So you need actually startups and fintechs to trial and error. It's like Darwin's law, only the fittest survive. Like 90% of the companies will die because the business model doesn't work, or the business model is great, but the people don't understand it. That is like a selection process in the startup world, and then these small companies can become very big, like an Afterpay, 8 years old, and now over 20 billion market cap company on the ASX. So you need these small companies to innovate, and then either getting merged with a big bang or bringing the innovation to everyone. And yes, there's a lot of opportunities, it's money to be made, but also it's a high risk.
So let's talk about Upstreet. So the app is only, as of today's date, the app's only, 24 days?
Yeah, 25 days live. Yeah.
So we're right at the cutting edge here, right on the bleeding edge.
Yeah.
What's gone into creating Well, first of all, explain what Upstreet is. It's shopping for shares.
Shopping for shares. So instead of gift cards or points, you get shares in the companies.
So it's a reward scheme. It's like your frequent flyer points, instead of
frequent flyer points as Qantas, you would actually get Qantas shares. Once Qantas is part of or uses Upstreet to offer.
Yeah, once Upstreet is taken on by Qantas.
Exactly. So this is the basic idea. Instead of intransparent or useless frequent flyer points, you actually get shares, a real value. It's transparent. We also found that there is a higher loyalty mean. So you're already a fan. If you transact with a company, you're already a fan of the company, but now you become an owner. And there's this whole owner mindset. If the company belongs, or you own part of the company, you're more likely to be loyal, and for this loyalty, you should be rewarded with a real value.
What has happened? It's only been a year since you've started up?
Yes. So
what's the process been to get this underway?
So the process is, we were part of the Antler Generator cohort 1 last year. So we had the idea. We first talked to lawyers. Is that actually possible in Australia to run this kind of a scheme? There's a Corporates Act, there's regulation, and you need to work through that. And we got early on the sign, that product will work. And we see it also happening overseas, that this kind of idea It's like not 2 years old. There are some first trials like 10 years ago, but it didn't work because of the regulation in the US. But now as time is ripe, you have the mobile technology, you have the regulation changed, you have the trading costs are so low that it makes sense that you can offer that. Basically, what was the question? Can we build a fractional investment platform in individual shares to offer the scheme? And also from a tax regulation and Corporates Act, it's all okay. That took 10 months, 12 months to sort that all out, to set up an Upstreet fund, to get it registered with the SEC. So it's a registered investment scheme. We are fully regulated, and then building all a mobile application or like a mobile experience, which is seamless. So what we don't want is like swipe your card. So you could go, a couple of months ago, it was still the case. You had to swipe your card or put your phone and Woovers. We don't want that because
there's no card. There's no card involved, is there?
No. So what we do, we link your bank account. So open banking, we will adopt that next year when it's more broadly available. But we're using a provider early stages in open banking, so we can get actually the transaction data from your bank account. Has multiple benefits. One is you don't have to swipe your card. You just set it up once in the app, and then you automatically earn shares as you shop. So it's like earning share rewards on autopilot. But we will inform you every time you get a little bit of a piece of the company. And on the other hand is we don't need to integrate with any of the big companies. So we're just talking to another ASX listed company, and probably if we agree today, then we go live next week. This is our fintech in its best, where we can have like this implementation time of a week instead of, if I need to integrate with their system, it takes a year. So that is very exciting because that gives us this scalability and also like the convenience. It's all about convenience, where you don't want to do that all the time. So and swipe a card or scan a barcode. You want to do it once and then set and forget, but also always informed. Hey, I got more shares. I'm now share owner in this company and in this company. And then you can even explore on the Upstreet app which other company gives you shares. So it becomes more an ecosystem or a network of different companies to then make it more meaningful for you, because if you just have one company and one transaction a month, it might not make a big difference. But imagine you can get like half of your yearly spend, you get a little bit back. That little bit becomes bigger over time. We reinvest the dividends into the
and that's all
share.
automatic. The dividend reinvestment is automatic. Yep.
Yes, that is, and then the appreciation of the stock price. We know from the past the stock Australia, the ASX goes up. Past performance is not a predictor for future performance, but
generally over a period of the time,
that works out quite well. So it's compared to a frequent flyer point or point. A point can, from my perspective, only has one direction. It devalues over time at the discretion of the issuer. And I think that's the whole idea. And also giving the opportunity to sell your shares with Upstreet and then take the money and do whatever you want. In a reward scheme, points-based system or gift cards, you're limited what you can do.
It's all the toasters, isn't it?
Toasters or mixers or flights, best case, if you get a free flight.
So this is, I'm just astonished that all of this took just a year.
Yes, so I think, and this is an interesting one, is I just got a question from a potential investor, because the company who does that in the US raised almost $30 million 3 years in, and it's just at Series A and just opened up their app. I think I looked at it a little bit, and what we did is we leveraged partner companies. So the bank linking, we are using a provider who built that over years. We could not have built that in a year. And we're using also a fund manager who built that fund as a service, which is a complete new thing as well in Australia. So we're partnering with strategic partners to build fast and have a fast go-to-market. For me, the year still took too long. But when I talk to others, they say, it's fantastic to launch a product within 12 months in this market, in the conditions we are having. It's a retail product, so it's highly regulated.
So the app's available. You just look for Upstreet in Google Play or
Apple App Store.
As you say, there's nothing else. You just have to sign up and link your bank accounts. Which businesses are available for this reward scheme?
Yeah, so we have 9 businesses so far on the platform. Our biggest partner is Marley Spoon. So you can earn shares when you eat your meal, and cook your meal and then eat your meal. Then we have 3 unlisted companies. They reward you with shares in an ETF. So that's one is Wando, they do indigenous foods. Then Minnow Designs, they do clothing and shoes for kids. And then we have Kill Capture, which is Tough Luxury, a good buddy of mine back from the consulting days. He has his own luxury leather jacket company, basically. I bought one. It's fantastic. It's kangaroo leather. I think it's very unique product. And then we have Adair's furniture shopping. We have The Good Guys for electronics. We have Schaefer Shop for personal care. Catch as an online reseller. And the Athlete's Foot if you need new shoes. That's it for now. And then we have a long list of companies. They are listed in overseas. So we're just working with our custodian to actually be able to buy international shares. And then in a few weeks, fingers crossed, we can offer then eBay, Lululemon shares when you buy yoga pants and a couple of other big companies, which we are very excited, almost 20. And then we're working a lot with like smaller caps companies in Australia. So fingers crossed we get in the next couple of weeks more companies on the platform.
And more importantly, you've got a brewer coming on board.
Yes.
Craft brewer.
Craft brewer.
Yeah.
Fingers crossed that it will work out. We are very, very excited to get them on board. And
a boy from Munich would be very interested in that, I'm sure.
Absolutely. I lived in Munich for 2 years. So,
yeah. You're not from Munich?
I'm not from Munich. Small town near Stuttgart. But I lived in Munich, and that's great. And beer culture in Germany is actually everywhere, not just Munich. Bavaria. Yeah, that's great. So you can enjoy your meal and your pint, and you get some shares as a reward.
Yeah, beer for shares. I love the concept.
Yeah, but drink responsibly.
Of course. Okay, Christian, thank you very much for joining me today.
Yeah, thank you for having me. It was a lot of fun.
Shares for Beginners is for information and educational purposes only. It isn't financial advice, and you shouldn't buy or sell any investments based on what you've heard here. Any opinion or commentary is the view of the speaker only, not Shares for Beginners. This podcast doesn't replace professional advice regarding your personal financial needs, circumstances, or current situation. Thanks to Christopher Soulos for music production with that special Greekalicious flavour. Remember, music always flows, even when the money won't.